The rates are coming, but the problem is that when you look at like the last few times that this has happened, after that first rate cut is when we've seen a significant downside in the stock market in general.
You're listening to Kerry Lutz's Financial Survival Network, where you get valuable information you just can't find anywhere else. To thrive in today's trying times, you need the Financial Survival Network, now more than ever. Go to financialsurvivalnetwork.com and get your free newsletter and gift. Financial Survival Network, now more than ever.
And welcome. This is Financial Survival Network. I'm your host, Kerry Lutz, and hey, we just got some job numbers out, a few of them, not to mention the massive revision where 818,000 jobs just disappeared. I guess if it didn't exist, it couldn't disappear, but when you say it's there and it's not, then you got to revise. Hey, expert in this area and all things economic, Eddy Gifford. Got a question for myself or Eddy, just shoot me an email, kl@kerrylutz.com. Eddy, great to have you back. So we've been hanging our hat for the past year and a half. Oh, we can't be in a recession. We got such great job numbers. Then they go revise it down, 818,000. You know, that is the equivalent of 70,000 jobs a month that we're vaporware here. What's the deal?
Yeah, well, the crazy thing, Kerry, is we're continuing to see it. I mean, the last 2 months were revised down as well as part of today's jobs report. We had a jobs report that came in under, and so it's kind of crazy because we've been leaning on this, quote, strong job market for the last year and a half. It's why we've been higher for longer for as long as we've been. And you and I have discussed this and how we've been seeing these cracks under the surface, how when you actually go out there and talk to the American people, like what the numbers were saying isn't what is, it didn't seem to be what was actually happening. And then bam, we get hit with the 800,000 another and then more recent revisions too. And it's just like one of those things where it's like who are they fooling? I mean, we saw it by just talking to people on a daily basis. And unfortunately, what it means is that the higher for longer was probably too high for too long. And now we have this yield curve uninversion, which typically says, hey, like slow growth ahead. And the whole idea of a soft landing, I think that pretty much, is off the table at this point. And it's just so frustrating because it's not like you couldn't see a lot of this stuff happening and you couldn't see this stuff coming, but we wanted to, I guess, like curb inflation. Well, I mean, we don't even know if that's actually fixed at this point, but what we do know is that everyday people are struggling and now it's really, really showing up. And it's September and we've got an election around the corner. So it's just like all this leads to like, buckle up because here comes the volatility. It's going to be wild and probably not so fun.
Yeah, definitely. So interest rate cuts in the offing here?
Well, I mean, I think that Powell has already come forward and saying it's time to change policy. And that's always kind of a telltale. That the nice thing about the Fed is unless it's some type of black swan event, they always tell you what they're going to do before they do it. So we know a cut's coming in September in a week. The question is, how big is that cut? Is it going to be 25 basis points? Is it going to be 50 basis points? And, I think it's a little bit mixed there. With all the revisions, you would lean toward a 50 basis point cut, but at the same time, the inflation fear and everything. So the rates are coming, but the problem is that when you look at like the last few times that this has happened, after that first rate cut is when we've seen a significant downside in the stock market in general. Don't know if that's going to happen again, but history typically rhymes. And with everything else that we've been talking about and the fact that unemployment employment is slowing down, jobs are slowing down, unemployment rate isn't showing it yet because a lot of people are probably just fed up and like, I'm just not going to look anymore. And if I'm not going to look, or if I retire, guess what? You don't get counted in those numbers anymore. So, unemployment rate is very, very misleading, especially given the circumstances that we have right now. So the cuts are coming, but unfortunately, I think the cuts are coming because they have to do it now, not because they want to do it to kind of start spurring some growth again. Like they have to do it, because if they don't, there's going to be absolutely no growth. And that's just a recipe for disaster, generally speaking.
Hey, so what about housing? The major home builders, they're still doing not so bad, right? Their share prices.
Yeah, of course, we're coming off of summer, and one of the primary building seasons. If you're looking at the jobs report, where were the most jobs being added? It was in construction. That makes sense. Like heading into like the last couple months before fall and winter, and then those payrolls typically slow down. And the thing about housing is that it's still the same story as it was a year ago. Like the builders are the only game in town, because all of the resales, all the people that have the 2% interest rate, they're not selling. And so if you're going to buy a house, you only got one place to buy it, and that's from a builder. Now, more inventory is beginning to flood the market, and that will hurt the builders over time, but it's still always a lag effect. Like people want the new house if they can get it, and the builders are still willing to buy down rates so that they get a below market interest rate if you buy a new house. So until the resellers actually start competing with the builders from that standpoint, paying for closing costs, paying to buy the rate down, doing these different types of things, we're not really going to see builders get hit. Now, if things just slow down, period, demand destruction is demand destruction. Everything goes down in that scenario. But the builders continue to be the only game in town. If you're only game in town, it's hard to go down.
Yeah, that's for sure. Hey, so the question is, have we really been in a recession all this time, and all the numbers just manipulated? They're not really reflecting the state of reality, like you said.
Well, if you talk to the everyday person, they've been in a recession for the last 3 to 6 months. And, they've been having to make those decisions. Do I buy milk or do I buy bread? Like the energy costs are going up. It's costing more to pay the power bills. The cost of water is going up because everybody's in a drought. And so all of these things, like they're inflationary from the standpoint of just the fact that there's higher demand. Doesn't even have to do with, the fact that we had all this stimulus that ramped up inflation everywhere else. So it would not surprise me if, things start getting really bad, and then we get the word that says, oh, by the way, we've been in a recession for 12 months. That just seems to be the MO right now. Hey, everything's good. Everything's good. And then you get 6 months down the line. Just kidding. We didn't really have those 800,000 jobs, but we wanted to say that we did so that we could make the stock market keep going up and everybody feel warm and fuzzy inside. So it's not setting up good for the next president. That's for sure. It doesn't matter who it is. Like things are broken, but they're not going to let them break. I don't think, until whoever gets in.
Hey, so Warren Buffett's been on a little selling spree. He sold Apple. He sold half his Apple shares. Bank of America, he sold $6 billion of that, as if we didn't need another negative indicator, right?
Well, it's one of those things, but Warren Buffett was never going to sell Bank of America, and you could say, well, he's trimming a position in Apple like by half. I mean, come on, that's a lot, and he's sitting on a pile of cash, the biggest pile of cash. And if you remember, Warren Buffett has 2 rules. Number 1, don't lose money. Number 2, don't forget rule number 1. And so, for whatever reason,
rule number 1, right?
Exactly. And so, for whatever reason, he's in this situation where he's like, hey, I want to have dry powder available. And part of it has been that he's had really, really good returns. I mean, Apple has done amazing over the last 10 years. But I also think that he's getting ready to pounce. And he's the guy that says, be greedy when people are fearful. The fear's not there yet, but it will be there. And when it happens fast, and it gets really crazy really fast. And that's where you're going to hear about Warren Buffett picking up all these new companies, these good businesses at very attractive pricing levels. So he's a smart investor. Things are near a top. You look at like all the earnings multiples, you look at all the PEs, you look at all of that stuff. We are in an overvalued market. Like there's no doubt about it. If if you're using like Kate measures for secular bears, like we've been there for a while. And so he's just getting ready. And again, that's not exactly like a great indicator when the person who's considered the greatest investor of all time is building a significant cash position.
He's sitting on $277 billion in cash, right? So what does that tell you? And we'll have to see the future reports if he continues to liquidate. But, the market takes a hit, then he'll go back and probably buy some of those same stocks back and increase his ownership position in Apple and in Bank of America, or maybe he'll switch to another sector.
Yeah. The other thing is that, you're going to have, depending on what happens in November, you're going to have a lot of activity because as people think one person's going to get in or the other, they're going to buy or sell, a lot of like tax motivated selling, I'm sure, because of the rampant up and if people are scared that taxes are going to go up, let's just take the 20% now and not get hit with a 28 or 33% later type thing. We're seeing the same thing with people asking about Roth conversions with sunsets happening in 2 years. And people are just like, I just want to pay the tax when I know what it is. And so there's a lot of reasons to exit right now, whether it's tax motivated or just the fact that we're near our top. But at the same time, if you're going to exit, you got to have a reason to get back in. And I think that that's the thing that's missing from a lot of portfolios in general is we buy for no real reason. And then when we buy, we don't have a reason to get out. You should always have a reason to get out. You should follow that reason. And then when you get out, you should have a reason to get in again. And you should follow that. And if you can stick to your discipline, that's your opportunity to win compared to like a passive portfolio. But unfortunately, a lot of people get emotional, and that's the thing that ends up hurting us. And when Warren Buffett is buying the stock, unfortunately, the everyday investor is the one selling it to him. So
interesting. All right. Well, I guess we're going to find out more as time goes by. Hey, the dollar is definitely well below its prior levels. It's trading close to 100. Generally, when Republicans are going to win the White House, the dollar takes a hit. And we saw, last election, the dollar was going up, which was definitely an indication of who was going to win that election. I guess we're just going to have to see. Eddy, just tell us where we find you, how we connect with you on the web.
Yeah, you can just Google Eddy Gifford and you'll find me. I'm right there at the top. But the website is tactivewealth.com/Eddy-Gifford. And you can go there. You can see how we do things, kind of learn a little bit more about our background. We always encourage anytime you're checking out a financial advisor, go to Broker Check, look them up, make sure that they don't have any crazy things that they've done in the past. But yeah, we're here for you. The flexibility that you need in your portfolio right now is something that we practice on a daily basis. We're not going to ride that roller coaster down to the bottom. We're going to make sure that we're trying to protect you if that catalyst does happen that really springs us into this crazy recession that we're all worried about.
All right. Well, hey, hopefully it'll be short and not too deep, but hey, always pays to be optimistic. The link to Eddy's site is in the show notes to this interview on financialsurvivalnetwork.com. Please go there, check out his site. While you're there, sign up for your free newsletter. Eddy, it's always a pleasure. Got any questions or comments? Shoot me an email, kl@kerrylutz.com. Eddy, we'll talk to you again real soon.
All right. Thanks, Kerry. Have a good one.
Thanks for listening to Kerry Lutz's Financial Survival Network, your solution to today's trying times. For the latest, go to financialsurvivalnetwork.com. Financial Survival Network, now more than ever.